Have you ever wondered why the stock market rises on bad news, or crashes after positive data? Why your money buys less every year, even when inflation is under control? Or why it seems like a few institutions always win, no matter what the economy does? Welcome to WorldFlow Finance, where we break down the truth behind the headlines. Today, we're revealing 10 powerful secrets that shape the financial markets, the forces hidden in plain sight. These are the rules of the game that most people never get taught, but the insiders live by. Let's dive in. 1. Central banks are playing a psychological game. The Fed doesn't just move interest rates. They move minds. The biggest tool in a central bank's toolkit isn't the rate hike. It's what they say about it. Every word from Fed Chair Jerome Powell is dissected like scripture. Why? Because forward guidance, the subtle signaling of future intentions, moves markets faster than action. When Powell says, "We are data dependent, markets here, we're not cutting yet." In 2025, rate cuts are on hold, not because inflation is fixed, but because the Fed needs to maintain control over sentiment. Traders now front-run every speech, press conference, and FOMC minute. If you don't understand how to read central bank language, you're trading blind. 2. Governments are quietly monetizing debt. They're printing the future, and you're paying for it. The U.S. deficit has ballooned to 9% of GDP in 2025. That's not just large, it's historically dangerous. So why hasn't it collapsed the dollar yet? Because governments inflate away their debt. That's the dirty secret. Higher inflation reduces the real value of what they owe. And the middle class? They foot the bill, in higher rent, food costs, and disappearing savings power. Stimulus sounds great, until the debt bomb matures. This slow erosion of wealth is a stealth tax, and it's a major reason investors are shifting to hard assets like gold, real estate, and even crypto. 3. Geopolitics now drive the markets. The economy is no longer just about numbers, it's about nations. From the Iran-Israel escalation, to Russia-Ukraine, to Taiwan, geopolitical flashpoints have become market movers. In 2025, capital is flowing based on war risk and nationalist trade policy, not just earnings. Tariffs, sanctions, and political standoffs now reshape supply chains in real time. What happens in the Strait of Hormuz can spike oil prices globally in minutes. The market no longer follows a logic of peace. It follows the logic of protectionism, conflict, and global uncertainty. 4. Retail traders are the new market movers. Wall Street still has the money. But Main Street now has the voice. Thanks to platforms like Robinhood, Webull, and eToro, millions of new traders have entered the market. And they're not following fundamentals. They're following memes, sentiment, and AI-powered trend alerts. The GameStop saga was no fluke. It was a turning point. Today, hedge funds use Reddit data and TikTok trends to gauge retail activity. Institutions now trade like meme investors. The retail revolution reshaped liquidity, and algorithms now chase the crowd. 5. Corporate buybacks inflate the illusion. Stock prices are up. But are the companies really growing? Here's a hard truth: many corporations today don't grow by innovating, they grow by buying back their own stock. In 2025, with still accessible borrowing rates, major companies continue to borrow billions to reduce share counts. Fewer shares equals higher earnings per share, EPS. Sounds good, right? But it's an illusion, there's often no real revenue growth. Buybacks boost stock price without building value, and they're masking declining fundamentals, especially in tech and energy. 6. AI and algorithms run the market. If you don't think machines move the market, look again. Over 75% of trades today are algorithmic, made not by humans, but by machines that react faster than any human ever could. BlackRock, Citadel, Renaissance, these giants don't rely on gut instinct. They rely on quant models. And now, AI language models scan earnings calls, Fed speeches, and even global headlines to trigger trades. It's not about investing. It's about speed, data, and probability. This means flash crashes, rapid rallies, and unpredictable volatility are becoming the new normal. 7. The game is rigged by design. Who writes the rules? The players with the most chips. It's called regulatory capture, when big corporations influence regulators to write the rules in their favor. The SEC, the Fed, and Congress often protect the giants, banks, asset managers, and megacorp. When crises hit, it's the biggest players who get bailouts, while small businesses close and everyday investors take the hit. The wealth gap is no accident. It's engineered into the system. 8. Inflation is rebranded, not resolved. The real inflation isn't in the charts. It's in your wallet. Government statistics exclude the items that hurt the most: food, rent, healthcare. CPI in 2025 says inflation is moderating, but shadow stats and real-world analysis show true inflation around 6 to 8%. So while Wall Street cheers disinflation, your grocery bill keeps rising. Inflation has been rebranded, but not defeated. It erodes purchasing power, devastates savers, and steals quietly from the average citizen. 9. The dollar's decline is no accident. A weaker dollar helps exports. It also helps hide the debt. The US is managing a controlled dollar decline, not a crash, but a soft fade. Why? Because a weaker dollar boosts exports, reduces debt burdens in real terms, and spurs local manufacturing. But it comes at a cost: import inflation, weakening savings, and hurting foreign debt holders. The dollar isn't collapsing, it's being managed lower. And markets are adjusting accordingly, with gold, oil, and Bitcoin surging in relative value. 10. Narrative of fundamentals. In 2025, the story sells the stock. The market used to run on earnings. Now it runs on emotion. Sentiment indicators, like the VIX, Fear and Greed Index, and even Google Trends, are more influential than EPS reports. Tesla isn't just a car company. Nvidia isn't just a chip maker. Palantir isn't just data. They are stories about AI, the future, and innovation. In this narrative-driven market, perception is reality. If you want to win, don't just analyze the numbers. Analyze the beliefs. The media is always behind. If it's on Bloomberg, you're late. By the time mainstream outlets catch up, the move is already over. Insiders act before the news. Hedge funds use high-speed data feeds and satellite imagery. You get the delayed headline. Retail investors must adapt, stop chasing the news. Start understanding the underlying mechanisms. What you can do. So, how do you protect yourself and grow your wealth in a market that's fast, engineered, and sentiment-driven? White heavy checkmark: study macro trends, not just price charts. White heavy checkmark: learn to read central bank signals. White heavy checkmark: diversify, use ETFs, commodities, and global assets. White heavy checkmark: stay informed, but stay ahead of the narrative. The secrets are no longer secret, you just need to know where to look. If you found this video helpful, smash that like button, subscribe, and turn on the bell icon so you never miss a moment of clarity in this chaotic market. This is WorldFlow Finance, helping you navigate the noise, and see the truth behind the trade. See you in the next video.